Realty income is once again closing in closer and closer to the 52-week low, and has dividend investors more and more interested in grabbing more shares and locking in a massive starting dividend yield with also some potential for capital appreciation. Now in this video, we are going to analyze realty income from head to toe and see exactly why, in my opinion, realty income could be a once-in-a-decade buying opportunity as it gets closer and closer to those recent lows. Now stick around because we are going to go through all this and more. Right after you, please drop a like in this video and subscribe for more future content like this. Now first, before we dig into realty income, let me first preface by saying that ticker symbol O or realty income is definitely not the perfect or best investment for every single investor out there. But for the investors like myself and like many of you out there watching that are looking to generate some substantial cash flow on a monthly basis and hopefully see some capital appreciation while holding on to one of the best, highest quality REITs in the entire market. Well then stick around because I have a lot of information you're definitely going to want to hear. Before we go any further though, let's talk a little bit more about realty income for those of you that aren't that familiar about it. Realty income got its start in 1969 with a single investment in a Taco Bell. And now today this REIT owns thousands of properties across America that are leased to hundreds of tenants operating in dozens of industries. Retail properties account for most of realty income's rental revenue, with industrial warehouses generating some of the additional. Now all of realty income's properties are under a long-term triple net lease agreement, which means that the tenants pay for things like maintenance, utilities, and even taxes. Now impressively, realty income has paid uninterrupted dividends since the firm's founding and has increased dividends each year since going public in 1994. But stay tuned because we are going to look closer into the dividends in a little bit. To look a little bit deeper into realty income, going on the website, they have over 13,100 commercial properties under the net lease agreements, a 99% portfolio occupancy, which means basically for the most part every single one of their properties are being leased right now. Over 1,300 different cities and 85 different industries. This is a high quality REIT that is heavily diversified. Now what's also crazy about realty income is that a lot of us actually step foot in realty income's properties a lot more than we probably even realize. Realty income leases to companies like Dollar General, Walgreens, Dollar Tree, 7-Eleven, Wynn Resorts, FedEx, LA Fitness, and many, many more, just to name a few. Now this right here is maybe one of the most bullish aspects of realty income in my opinion. It's the fact that the property diversification type is made up of mostly retail. Now especially knowing the type of tenants that realty income leases to. These are tenants, these are businesses that are going to be around whether the economy is good, whether it's bad. It doesn't get much better than leasing out your properties to recession-proof businesses. Now, of course, one of the main reasons on why most of the real estate industry is under some pain right now is, of course, because the Fed has been raising interest rates for well over a year now, with interest rates over 5% compared to the 2 or 3% that we saw just a few years back. This is, of course, putting a lot of pressure on real estate investment trusts because, once again, they do utilize a lot of debt to buy properties, and of course, the higher interest rates are, the more expensive the debt is to obtain. But zooming out to the max chart and seeing how realty income has traded as far as historically speaking, since the mid-1990s, realty income is up over 638% just as far as share price. This does not include dividends, this is just as far as share price. So any time in history, if you would have bought a realty income and held long enough, besides maybe a few instances, for the most part, you should be in the green by quite a bit at this point. On top of that, realty income was trading at over $75 a share just a matter of a few years ago. So in a situation where interest rates start to get paused and then cut from there, again, this is all speaking for a longer term investor. Real estate will once again be able to borrow money for much, much cheaper in theory than they're able to borrow it today, and the real estate industry itself should be back off into the races. So next, looking into realty income's current share price, it's currently trading in the mid $58 range once again, with realty income being back up to $63, almost $64 per share just as of a few weeks ago. But year to date, realty income is down 8.17%. Over the last year time frame, down 20.96%. But on the max chart, realty income is up 635.51%. So this stock definitely does have the potential, in my opinion, to get back up to some new highs. And it wasn't all that long ago that realty income was almost trading at $80 per share. Digging a little bit deeper into realty income's dividend, the current dividend payout is around 26 cents per month, and that's for one share of realty income. And keep in mind, just a few years back, realty income was only paying around 22 or 23 cents per share per month. This real estate investment trust continues to raise their dividend consistently year after year. And for me personally, now owning close to 2,000 shares of realty income, the more and more I accumulate, the more and more, of course, I get paid on a monthly basis. So for me personally, even if realty income trades sideways for a while and allows me to accumulate more and more shares, I will be more than happy to get paid an over 5% starting dividend yield with future dividend growth on top of that. Now, it's no secret that Realty Income has definitely seen some pressure because of the crazy amount of raises that we've seen in interest rates from the Fed over the last year or so. And on top of that, right now, Treasury yields are offering a massive amount of yield for investors that are looking to invest money at absolutely no risk to them. So it does garner the point, why is Realty Income worth investing into at a 5.22% starting yield when an investor out there right now could literally buy into a T-bill or even a CD and get a 5.5% starting yield with literally no risk? Well, like I said, Realty Income might not be the perfect investment for every investor out there. But for the investors out there that are now looking to lock in a well above 5% starting dividend yield, with some dividend raises coming up very soon, at least if Realty Income was to stay on their same trajectory, investors could lock in a great starting yield with the potential for dividend growth. And again, if Realty Income hasn't taught us anything else, we know that Realty Income could be right back in the $68 range in absolutely no time. Now, with that all being said, in the unknown conditions ahead in the overall economy and the markets, when it comes to dividend investing, dividend investors want to know, is the dividend on whatever ETF or even stock going to be safe moving forward? And according to Simply Safe Dividends, it says that Realty Income was actually upgraded from a 70 safe to an 80 safe, which is very good, and this was as of March. And to give you some insight, they said Realty Income has had uninterrupted dividends for over 50 years and has achieved dividend aristocrat status with nearly 30 years of annual payout growth. The diversified retail REIT owns thousands of properties spread across the US in prime locations and has achieved stellar occupancy rates that have never dipped below 96% even during the financial crisis and even during 2020. Now, most of the A- rated property owners, tenants, have a service, non-discretionary, or low price point element to their business, which makes their businesses, in my opinion, very recession-proof. Now, we're talking about companies like Walgreens, 7-Eleven, Dollar General, FedEx, and Dollar Tree. All companies that will most likely be around, whether the economy is doing good, bad, or indifferent. And that means these companies will continue to pay Realty Income's rent on a monthly basis. So with Realty Income once again trading in the 58s and getting closer and closer to the 52-week low of 55.50, I just so happen to think that we're going to look back, whether it's 1 year, 2 years, or 3 years, or maybe even a lot shorter. And some of us might think to ourselves, why did I not grab more shares of Realty Income when it was down well below $60 per share? For me personally, I'm closing in on around 2,000 shares of Realty Income throughout my multiple portfolios, and I also sell covered calls on many of the shares that I own, so I do cap the upside but also do have some downside protection and also earn a pretty substantial amount of premium for doing so. But moving forward, when Realty Income is trading around these levels, I'm personally looking to buy Realty Income shares consistently over the days and have absolutely no problem holding on to Realty Income with a starting yield north of 5%, and again, hopefully some massive capital appreciation like we've seen historically ahead. But I want to hear what you guys think down below when it comes to the monthly paying dividend REIT. Is Realty Income currently on your watch list, and have you been buying shares? If you enjoyed this video, make sure to please drop a like on the video and subscribe for more content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.